Welcome. This is quite the space. I feel like Harry Potter at Hogwarts. Most unusual, but it's actually beautiful. So this is the last full panel before Darren Walker in our keynote wraps up the conference. And joined by our two panelists today. And I'm going to introduce them in just a minute. But before we get to that, I just sort of want to set the background to this panel with just two slides sort of introducing what's going on in clean energy and renewables. And if we could just pull up that slide. So many of you may be aware of this, but it's worth reiterating that there's a global energy transition going on at this point, that renewables are quite rapidly replacing fossil fuels in the generation of power worldwide. More renewable energy capacity has been built in the last 5 years than coal, oil, or natural gas globally. And in fact, in 2017, the last full year, twice as much renewables was built as fossil fuel power capacity. So we're going through this massive energy transition. And if you don't believe me, you can look at BP Energy, British Petroleum, is writing about this. In fact, this is their graph. This is their projections for the future. The CEO of Shell saying the energy transition is unstoppable. So the experts in the energy field see this coming. This is happening already. So for the energy geeks in the room, people like me and probably my co-panelists here, this is very exciting. But it's actually really important for everyone, not just those in the energy sector. And the reason for that, sort of stating the obvious, is the other slide, which is the connection between energy use and climate change. Energy is the largest source of greenhouse gases. And this transition to clean energy, which also includes transition from the internal combustion engine in automobiles to the electric vehicle, and the transition from fossil fuels to renewables, is actually the best hope we have for addressing climate change. And I say hope, it's actually happening. The transition is definitely happening. What we don't know is whether it'll happen fast enough to actually allow us to address climate change and avoid catastrophic climate change. But for anyone who cares about anything on the planet today, this transition is incredibly important. So I've asked our panelists, Nate McMurry and Peter Davidson, just to take a minute or two to tell us about the work they're doing in this sector. And then I've got a few questions for them, and then I want to open it up to audience questions. So Nate, over to you.
Hi, everyone. Thanks for coming, and thanks for the invitation. As Bruce mentioned, I'm Nate McMurry. I work at EDF Renewables, and I was a CBS 2010 grad. EDF Renewables is one of the largest developers and owners of renewable energy projects, independent developers and owners of renewable energy projects in North America. And we develop renewable energy projects globally as well. We are solar and wind focused. We're not a manufacturer, not a technology company. The business model is essentially similar to real estate development. We try to find a good site, a site that has good wind resource or good solar resource, ability to interconnect into the grid, land that we can acquire, and then we try to find somebody to sign a long-term contract to buy the power. Once we do all those things, we can build a project, at which point we've built something that has substantial value and is of interest for players with long-term lower costs of capital. My job at EDF is primarily M&A, some growth and corporate strategy, but mostly sell side. So once we build one of these projects, it's highly attractive to long-term financial investors, investors like life insurance companies, pension funds, and infrastructure funds who have a lower cost of capital and don't want to take that development risk. But once you've built an asset that has long-term contracted cash flows, are willing to invest at a very competitive cost of capital. And so I manage all of those M&A processes and investor relationships.
All right, good afternoon. Peter Davidson. I work at a company, Aligned Intermediary, a company I founded. And our mission is to work with investors, primarily large-scale institutional investors, pension funds, endowments, sovereign wealth funds, as they move capital into the clean energy investing space. So we work on behalf of 12 large institutions, sovereign wealth funds, we can get into them later, that are interested in making this transition. And we'll talk about this. There are a number of blockages for why it's very hard for large institutional investors to move capital. There's a huge opportunity to fund this transition, and we'll get into that. But that's what I've been doing. We founded this 3 years ago. Before that, I worked for the Obama administration, the Department of Energy, running the Loan Program Office, which is the largest clean energy financing institution in the United States. We have now a $40 billion portfolio, and that's all for financing projects that reduce greenhouse gas emissions and then aid in the United States becoming a more efficient, energy efficient country. So.
Thank you for the introductions. So Nate, and by the way, Nate's a former student of mine. It's always great to have a former student back. Nate and Peter, where's the growth today? Where's the action today? And how has that changed in recent years? Start us off.
Sure. So what's changed a lot, so I think the growth today is in a few areas. Wind and solar continue to enjoy strong growth, and battery storage is also an area where costs are coming down dramatically and where we've seen that growth start, and it's going to accelerate tremendously over the last couple of next couple of years. How this has changed a lot since I was a student here is that 5 or 6 years ago, people didn't know who the winners were going to be. There's a lot of venture capital investors investing in a lot of alternative technologies. Frankly, a lot of those venture capital funds did poorly, and a lot of those technologies struggled to attract capital and ultimately failed. But what's succeeding now has been unbelievably successful. We've brought down the cost of wind and solar energy far more dramatically than I think anybody ever could have foreseen 7 or 8 years ago, to the point where we're now in the vast majority of markets the cheapest source of, if you're going to build a new power plant, it's in most areas, in most places, it's going to be a renewable energy plant. And that's going from a very short time ago when we were heavily dependent on government subsidies, and the idea of having an administration like our current one was far more terrifying. Now, this transition is really inevitable because it's being driven by economics more than policy.
Yeah, I think there are two things that have really happened which are amazing in this country. One is the rapid price decline of the technology, solar and wind in particular, down 70–80% within the last 7 or 8 years. And that's coupled with the fact that we have competitive energy markets. And so the utilities and the people who buy energy can bring it onto the grid. So that's why the whole role of government and policy is so crucial to having the energy transition occur. Where there are monopoly utilities, and those utilities are the ones who also control the generation. Generation is how you make the stuff, whether you make it in a coal plant or a gas plant or a renewable energy plant. Someone makes it, and then someone buys it and distributes it. If those are separated, markets can be successful. If those are together, which is a monopoly market, it really stymies innovation and doesn't allow the lower costs to come into the market. So we're very fortunate in this country, not to lecture too much, but in this country, the whole energy mix is controlled by the states. We have some energy policies nationwide, it's basically pipelines, but the rest of the energy mix in the United States is controlled by the states. That's why public service commissions, the utility commissioner of states, are the most important officials as it comes down to state policy. And so some states allow for generation to come in and others are monopoly. The only thing I want to just make the point to what Nate said is we have to remember the change is happening so quickly. And now when we get into financing, we'll talk about large-scale wind, large-scale solar projects where you have a contract to sell that power to a utility or to a Google. Those contracts now are considered gold, and anybody who has that, you can finance that deal at a 6% cost of equity capital. Okay, it's a no-brainer deal now. As recently as 2011, 2012, utility-scale solar projects, 100, 200 megawatt projects out in the middle of California, built by an EDF, built by an NRG, built by a major construction company selling the power to Pacific Gas and Electric, or, well, bad example, but selling to a very strong utility. Those contracts could not be financed. Those developers could not arrange a bank loan because the technology was too new, it was considered too innovative. And what's happened since then is the government financed a number of those projects, it demonstrated it. Commercial banks became familiar with how you underwrite multi-hundred-million-dollar loans. And so the whole market has evolved. But the story of the renewable energy market is not only the rapid technology decreases, but how the whole market has responded so quickly across the board. And just changes happen unbelievably quickly.
Yeah. Remarkably good things going on in this sector. Technology, open markets, access to capital. So what are the challenges? What makes this actually quite hard to scale? In your business, Nate, what do you see the challenges to further growth? And Peter, on the financing side.
Sure. So a few had mentioned, and so the most exciting thing is that it's no longer economics, right? And so once the economics are on your side, you hope that you're an unstoppable force, and over time, this is all going to happen. Nobody's going to, over the long term, not choose the most economic solution. But that doesn't mean there are a number of barriers that we face today. A couple I'd highlight. One is a lack of transmission capacity. We could build as much of the cheapest power available anywhere in the world, all up and down the kind of the wind corridor, Nebraska, Kansas, Oklahoma, West Texas, the Dakotas, and we could build virtually an unlimited amount. Unfortunately, nobody lives there, and building new transmission to where people live is really virtually impossible for a variety of policy and permitting reasons. It doesn't mean it doesn't happen, but it does mean that if it does happen, it takes 15 years, and for the first 10 years, you're at substantial binary risk of failure. So that lack of transmission capacity is a huge problem. Lack of battery storage or lack of energy storage is also a barrier when renewable energy is intermittent. And as much as we all cheerlead for the industry, you need power around the clock, and it needs to be predictable, right? Battery storage costs are declining at an incredibly fast rate to where it's becoming economic to build battery storage, especially with solar plants in a lot of areas of the country. But we're still a few years away from that really being a major contributor to reducing renewable energy intermittency. And another that I'd highlight is overcapacity. So I mentioned that we have, and this is certainly specifically in the U.S. So as I mentioned, if you're going to build a new project anywhere in the U.S., it's usually wind or solar is going to be your most cost-competitive solution. But there's a lot of extra electrical capacity in the U.S., and load is growing very slowly. So just because we're the cheapest thing to build doesn't mean that anybody wants to build anything new, and we're not necessarily cheaper than shutting down an existing coal facility or an existing natural gas plant. So we're fighting to compete in an oversupplied market that has very low wholesale prices.
Full agreement with that. The only thing I would add is, as I'm back to the point about it being state-based, a number of states are on the program. They happen to be highly correlated with the blue states. They all have very aggressive state policies, renewable portfolio standards, which means a mandate from the utility, a mandate from the commission, the utility commission, that the utilities have to buy renewable power or low carbon power. That is the law of the land in about 20, 25 states now, but it's not in the other 30. If those same policies are adopted in those other 30s, it will really help grow the industry the way it has. So it's a strange thing in this country. Some of the states with the highest solar deployment are Massachusetts, right? Very not sunny. Minnesota, very high. Some of the lowest are Florida, right, where there's a lot of sun, but that's all state-based. So I think that's a big issue. I don't know if you want to go there, Bruce, but there are other problems.
You're going there.
I'm going to go there anyway. But the other problem, there's renewable energy is energy, but the reason we love it is because it goes against the problems we have with the climate. And there are serious problems still in the deployment, essentially how we get coal first out of the system, then behind that, how we get natural gas out of the system. So we can talk about that really being a transition fuel or if that's a con job. So that's one. But the other thing is the issue of the other sectors of the energy world which produce huge amounts of carbon, which aren't on the electricity side, right? So that's the transportation and that's heating, which are huge, huge issues, which when we talk about the transition, we talk a lot about electricity, which is renewable energy, but we need to start talking about the transition in transportation, which is where we use oil in this country, and the transition away from heating, home heating, which is where we use natural gas.
So Peter, since you brought up the subject, any thoughts on that transition to electric vehicles? That's a much less certain path. I mean, the power transition is pretty much baked in, but the transition to electric vehicles is still very early days. Yeah. Thoughts on that?
Yeah, and what's exciting about electric vehicles, well, if we do electric vehicles, we remove oil, and that's great for the environment. The problem is, what makes it an opportunity now is because electricity, its costs have come down so much. Because of renewables, it's viable now in a way it hasn't been before. So now the issue is how do you deploy the vehicles? But that's happening. So many automakers are already, they've announced they're discontinuing internal combustion engines by 2030, 2040. There are large state-based mandates. Every auto manufacturer is coming out with EVs. This whole little scrape with GM and the president is all about GM's increased focus on electric vehicles and away from internal combustion engines. So the industry is responding well. The question is charging infrastructure. And the question is about that is how do you finance something like that globally, and it's got to be pervasive. One of the reasons that renewable energy, wind and solar, is so good and has exploded is because it's the whole tradition of project finance. You have a customer, you're building something, that customer is going to pay for energy for 20 years, you can go get a loan against it, right? So it works. How do you do that in electric vehicles? Because the amount people pay to charge up, people have not been able to prove that in a financial model as a way to get a return of your loan, your return of your equity. So it's ended up being the entity that's footing the bill for the deployment of EV is all government. And government has a role in the beginning, but if we're really going to scale, we have to have the private sector come in, which means there has to be a clear way to finance projects and a clear way to perceive profitability. And that's what's been missing.
So speaking of the government, Nate, you mentioned earlier that incentives are much less important than when you were at Columbia, and we spent a lot of time looking at policy. But how important is federal government leadership in this regard, both in terms of actual subsidies and policies, and how much just in terms of providing leadership and direction? And the spat between the president and the GM is sort of an interesting twist on that.
Yeah, I think the federal government is still tremendously important. The exciting thing now is that a hostile federal government can't shut the industry down. It's like cheerleading for the horse and buggy company with cars coming along, right? There's no stopping it, but you can certainly facilitate the transition in a much more productive way. And certainly, I think what we and most people in the industry would love to see is, subsidies aren't as I mentioned, not the biggest deal. We'd love to see, federal permitting or federal programs around, permitting of new transmission and more coordination with the states around transmission build out. Federal programs around around EV charging infrastructure. Those types of barriers that are not directly tied to the technology's economics, but those barriers that are inhibiting us being able to scale as fast as we'd otherwise be able to.
And just on the subject, are you looking at offshore wind much? And what's the government's role in securing that? Because there's usually a lot of jurisdictions that come into play when you look offshore.
Yeah, we are, which is interesting. I, for one, 5 years ago, wouldn't have thought there ever would have been an offshore wind industry in the U.S. The costs in Europe were just incredibly high. Most, even 3 or 4 years ago, most offshore wind in Europe was being contracted at levels like $200 plus per megawatt hour. Now you're seeing levels of $50 or $60 per megawatt hour. So and this is a really, really short period of time this has happened in, and much, much faster than anybody thought. So it is an area we're looking at. It's going to be, I think in the U.S., it'll be most competitive in the Northeast, primarily because power prices are already fairly high in the Northeast, and it's hard to build new transmission infrastructure into the Northeast. It's hard to build, frankly, too much of anything in the Northeast because there's lots of rich liberals who don't want anything built anywhere near them, despite their good intentions about the climate.
I think he's talking about us, Peter.
Exactly.
It's kind of a blast there.
Well, no. I mean, it's an interesting thing, right? I mean, to your point around Northeast, lots of blue states have mandates. They're also often the most, expensive places to build. It costs us 3 times to build something in New York versus Texas, right? So. It's an interesting dynamic. It is. I'm not an expert on the offshore regulatory, offshore regulatory environment. They're tremendously risky and long development lead time projects. These are projects that are, a normal wind or solar project might take you 2 to 4 years to develop and might cost, $2 to $10 million before you actually have to build the thing. Pure development risk capital. And an offshore wind project is going to take 8 years and cost likely over $100 million. And that's a lot of money to be, at binary risk, right, when you still have a risk of that project not happening at all. So the good news is that the industry is getting mature enough that people are taking those risks, but it's still at a very early stage.
Thank you. And Peter, back to you on the federal government's role, because you worked in the last administration and are very, very intimately familiar, putting aside the tweets and the histrionics, but where is the federal government at the moment in terms of supporting the industry or not supporting the industry? How important is that? What does it look like going forward? What are your thoughts?
Yeah, I think in terms of renewable energy, which was so crucially dependent upon federal policy before, in terms of subsidies, in terms of tax breaks, kind of the cat's out of the bag now, and 60%, people don't realize this, 60% of the power built in the United States now for the last 5 years has been renewable across the board. I mean, so there's no such thing as renewable energy being niche. And that's not only in the United States, it's around the world. More than 50% of everything new that's being built is renewable. And it's that way because it's lower cost, right? In addition to the other benefits, but what's really driving that is the lower cost. So the subsidies and the incentives that were needed for renewable energy deployment are not so needed, and this administration is trying to wind all that back and change things. Where I think the federal government was extremely helpful for innovation and for driving down costs, and now can be very unhelpful, is in this area of really tight regulations. And if you look, it's kind of 2 examples. One is what happens with cars and auto mileage and the CAFE standards, which is the fleet mileage. Industry was bitching about that when the Obama administration said you have to increase the average fleet mileage per gallon from 15 miles a gallon to 20. Now the rules on the books, that's going up to 45 or 50 miles per gallon across a fleet. So it's called the CAFE standards. Huge complaining by industry, huge lobbying against it, but it was driven through by Democratic president, Democratic Congress. If you look at what's happened now to the auto industry in the United States, cars are much better. All the US GM, Ford are selling their cars much higher sell-through. They're just better car companies because they've had to adopt to the tough policy regimen they lived in. So when you think about rolling back those, maybe it's a short-term boost to industry, but you're cheapening you're lessening your strategic value over time. The second example is what we do in regulating emissions from our natural gas network. That's one of the hugest environmental problems we have, methane emissions from our natural gas infrastructure around the country. That can only be, that's a mandate, that's a regulation. You're not allowed to leak methane. And if you force companies, the pipeline owners, to pay attention to that, by penalizing them, by imprisoning them, by making it a penalty, you will force those companies to invest in better technologies to control methane emissions. And this administration is trying to roll back all those regulations in that.
Thanks for those two examples. It's very helpful. The last topic I want to touch on, last major topic before we take audience questions, is capital. Source of capital, access to capital, barriers to raising the enormous amount of capital that's required in this sector. Nate, where is capital coming from today? What are some of the challenges you see in that area?
Sure. And I think as Peter was mentioning earlier, that's been just a sea change over the last 7 or 8 years. There's on de-risked assets with contracted cash flows, there's tremendous availability of capital. There's pension funds love the long-term contracted nature. They match well with their liabilities, similar and you can still enjoy a substantial premium to bond returns. Life insurance companies like the sector for the same way, as do a lot of infrastructure private equity funds. But that is for, that's once we've already got the thing built and de-risked, right? And that's the hardest part. You don't have a lot of investment in, you have much, I'd say you actually probably have less investment than you did 5 years ago in new technology. There's probably a lower availability of venture capital for energy infrastructure technology than there was 5 or 6 years ago. There's still limited capital of, I'd say, development capital for a company like us. We're owned by a big international French company. We have plenty of access to development capital, but a lot of smaller developers, that's a huge challenge. A third-party financial investor has a very difficult time assessing the risks associated with developing a project for 3 or 4 years that's going to be, for the next 3 or 4 years is going to maybe worth zero. So those investments in technology and investments in earlier stage, higher risk projects, I think there's still certainly plenty of availability for new sources of capital.
I'd say 2 things. One, renewable energy can get resources. Nate just mentioned why, but there are other huge issues we have really to achieve the Sustainable Development Goals, if you want to talk about those. Some of those goals, increasing resiliency, building out resiliency, dealing with the issues of urbanization and making urban environments healthier. The whole issue of natural systems, forests and land, which are huge problems, but also huge potential solutions for emissions going forward. It's hard to understand how you finance that stuff. Like the best thing we can do for the environment is to let trees grow, right? But hard to finance that. So that's the whole idea of carbon credits, and is there a market there? And so that innovation around carbon credits is incredibly, incredibly important. And if there are young people here coming out of business school looking for an awesome career to build that's going to be very low pay for 5 years, but then could be big, that whole area of credit and carbon credits is both helping to solve the problems of the world and could be a great business. So I think just how you monetize and make business deal available, trickier parts is a huge issue. The second is, I agree 100% with Nate. Certain projects, when they're ready to go, there's a lot of capital. But in order to solve the SDG goal of renewable energy deployment, as a world, we need to come up with $1 trillion a year just in building out the energy systems. And as a world now, we're spending about $300 to $350 billion per year. So just to fully fund the renewable energy transition, we have to double or triple the amount of money that's being spent. That money has to come from pension funds, sovereign wealth funds, insurance companies. That's where the money of the world is. And if you look at the way those institutions deploy it, the people that are investing in Nate's projects a lot are people who have their own direct investing teams, insurance companies, or some of the Canadian pension funds, the Scandinavian pension funds. But your run-of-the-mill pension fund, the people who manage Columbia's money, they do not do direct investing. They put all their money through managed funds, BlackRock, KKR, Apollo, all those people. And those fund managers generally do not have green-only fund. They don't have green infrastructure funds. They don't have green growth equity funds. They don't have green venture funds. Until we start seeing that green space emerge as an asset class, we're going to have problems raising the capital we need.
Raising large amounts of capital. So we have about 15 minutes for audience questions. If you'd like to come up to the mic and ask our esteemed panelists a couple of questions, please do so. And while we wait for people to come up, since you mentioned career opportunities and carbon credits, which, by the way, having been in that field, I do not recommend you go there. But that's a personal bias of mine. Just a word on career opportunities. What do you think? Where would you recommend people head?
Sure. So I think, like everyone, my experience is biased by, what I actually did and what I enjoy doing, right? So it's always going to be different depending on, what your personal goals and strengths are, right? So I did investment banking at a boutique investment bank focused on renewables for about 3 years after Columbia. Then I went to a smaller developer for a few years, and then we sold our company to EDF. I think there's a lot of opportunities in the renewable sector for people with that, kind of traditional finance background in transactions and valuation and modeling and so forth. So I think that renewables is certainly a good area for people with kind of traditional MBA skill sets like the ones you're learning at Columbia. In terms of areas with faster growth, and if you have a larger interest in technology, there have been a number of smaller mid-sized companies developing technology around energy storage, not typically battery manufacturers, but companies building software or ancillary products that help utilize storage better that have attracted capital, and many have sold to larger companies in the last few years. Also, electric vehicles, despite, as Peter mentioned, all the electric car companies are investing a ton or all the companies are investing a ton in electric vehicle technology today, but they're still a negligible part of the market. So it's a market where you can see there's a line of sight to this being a huge market, but the market today is tiny. And so that's an exciting time to get involved in an industry, because there's going to be, none of us know exactly what the future looks like, but there's definitely going to be tremendous growth and a lot of opportunity. And I would highlight that this is focusing really on the power sector here, and for all the bullish things I've said about renewables, the global carbon picture still looks really, really terrible, right? So just because solar is now the cheapest thing to build in the world, it doesn't solve anything about deforestation in Indonesia or any of the other huge global carbon problems. And those are areas where I think there's just we're nowhere in terms of innovation around markets and business models that solve those problems.
Thanks for that additional comment. Please.
Hi there. I was curious what your thoughts are on the future of nuclear, if it's sort of terminally ill, particularly with Vogtle being a disaster. And also piggybacking off what you said, globally the projections being quite dire, if perhaps nuclear can step in and sort of mitigate some of that.
Well, since I made that loan to Vogtle,
Sorry.
of which the taxpayers have been fully protected. No, the ratepayers have had a tough time, but the taxpayers have done okay. There's a huge political and personal feelings related to nuclear. I think in terms of the facts of it, it's low carbon and it's base load, and there have been really lower deaths related to nuclear than any other form of energy over the last 50 years. So there are certain things that are positive about it. The reason I'm not, as a policy, from a policy perspective, very excited about it is just gotten so difficult to permit and build, really having nothing to do with the generation. It's become political. It's become huge cost overruns in every single example. These new ones were supposed to be modular and simpler, and that just hasn't worked. They're having the same problems deploying them in China. So I think the consensus is large-scale, multi-billion-dollar, gigawatt and above facilities just don't have much of a future. A lot of people, very smart people, committed to CO2 and energy, are real believers in small modular reactors. So there's a lot of action in that, and the government is still continuing to fund that pretty aggressively.
Hi, thank you, Peter, Nate, Bruce, for your words. My name is Juan Espinosa. I come from Mexico, and I'm a graduate student here at Columbia University. And in this regard, I don't know if you've heard about the recently elected Mexican government just announced like refineries. They want to build a coal plant, arguing, I don't know where they got their numbers from, that it's cheaper than renewables now, maybe in some cases. But what would you think would be the best way to approach these new elected or appointed people to make them aware of the correlation between the energy system in terms of greenhouse gas emissions, and that Mexico has a lot of potential for wind, solar, and I don't know why they are like betting for coal right now, because we actually buy a lot of natural gas from the US, and they want to be more energy independent, but I don't know how can we be energy independent if we even don't have coal. So what would you think would be the best way to approach these new people?
I don't know if I have a perfect answer, but we are developing projects actively in Mexico. I'm actually working on a couple of Mexican projects currently that did receive awards from government auctions over the last few years. I mean, I think it's, I mean, I really think that that's just, I don't know the background of the statements on coal or those plans, but I mean, I imagine that's pandering to some self-interested folks. The pricing for those contracts that are being won is all public. It's in the like $20 to $30 per megawatt hour range. To build a new coal plant is going to be 2 to 3 times that. So there's just no comparison. And when we look at our forecasts of what's going to get installed in Mexico, it'll be some natural gas, especially as pipeline capacity for the U.S. expands and as a balancing resource, and then the vast majority of the rest will be solar. So in terms of other challenges in the Mexican market, I mean, I think there certainly are, there certainly are they are significant, and but I think the government is well aware of the cost trade-offs.
Thank you.
Hi, I'm Hong from Vietnam. I'm one of the Obama scholars at the Columbia University. My question for 3 of you. So despite the global trend to increase renewable energy and reduce coal, there are still a lot of countries, including Vietnam, that plan to have a lot more coal power in the next until 2030. Especially Vietnam, we plan to triple our coal capacity. So I founded an NGO and now a new social enterprise, and we want to promote renewable energy. And a lot of cases, we just feel like we want to quit because it feels like we're hitting a huge stone metal wall because the government totally supports coal. So for me, as a social enterprise promoting renewable energy, what do you think that I should use as the strongest argument for the government and for the people who believe that coal is cheaper than renewable energy? What should I do? I mean, what would be the strongest argument here for developing country, not US or, yeah.
I think just building on Nate's point earlier, that the advantage that we have today to deal with this situation, which is very common, it's not just Vietnam or Mexico, is transparency around pricing. That when there's transparency around pricing, renewables are in a very, very good position. The challenge in a lot of these markets is lack of transparency, and sometimes there's related reasons for that occurring. So what I would recommend is an emphasis on the economics of these projects and the transparency around the economics, as opposed to the environmental. But the environmental rationale, which is frankly extremely important, is actually very hard to convince anybody to change. But it's very hard for them to argue when solar and wind are cheaper. And that's his strongest point.
I was just saying, this is why energy is such a fascinating field, because it really is society and it's politics. And Vietnam is it's a well-known country in the renewable energy world because it should be so strong. It's a great natural resource. But it's a whole problem with the utilities, and it's who controls the utilities and the vested powers of the utility. And it's the utility there that refuses to be part of the transition, because the people who own the utilities are the people who own the coal generation. And there's a lot of money in the whole world that's being made there. So there are plenty of renewable energy developers who would happily build facilities, but you have to get a contract from somebody, and the utilities won't give a contract. And then once you've built it, the utility has to agree to interconnect and take that power. And unless there are laws in place that allow that to happen, people like EDF and other rationally based decision makers won't go into it. But that can't be changed in Vietnam until you change the economic incentives of those people who control utilities, who are extremely influential in the government. So it's a people power has got to make a change. So that's why you really have to organize from the ground up. That's what's led the renewable energy transition. It's all part of the same.
Please don't give up.
Okay, thank you.
Hello, my name is Paul. I'm a graduate student here at Columbia as well. And I wanted to know about your thoughts on how to reduce the carbon footprint in the shipping industry. Because when we talk about transportation, it seems like everyone is focused on EVs and how cool they're going to be and how great they're going to look, but it seems like the shipping industry is lagging behind the reduction of its carbon footprint. And since they're using heavy oils and it's a really contaminating industry, yeah, I was just...
we're all kind of like 3 facts. So I think not my area of subject matter expertise, and I certainly won't pretend it is. I'm well aware that the shipping industry is kind of behind the times. I have heard a lot actually about putting sails on ships. So certainly not in place of an engine, but if you got a sail that's doing a small percentage of the work, you can, in addition to your engine, it can have a significant impact. I think in terms of barriers, a lot of these companies are fairly entrenched in getting paid on cost plus basis with very old shipping stock. There's also a lot of overcapacity in the shipping industry at the moment, and so I think none of those things are conducive to an environment that's a little more innovative. You have 2 other facts?
Yeah,
That's all I got.
It's a real problem, but there's a policy solution. A number of countries have agreed to basically eliminate the worst. It's the worst form of diesel is going into shipping. So countries have agreed pretty much to eliminate that. And I think, I forget the status of that, but there's an international agreement to do that, so that's positive. And then we've seen a couple of business proposals from companies to do electric-powered, battery-powered shipping. The problem is you just need massive batteries, and so it's hard to make it economic.
Yep.
What is happening, the Port Authority is doing it here in New York, and they're doing it in Los Angeles, is they're making the way that ships run when they're at ports battery-powered, because that's a huge problem, particularly for poor neighborhoods in the United States, which is where most of our ports are. Newark Port, it's in less affluent neighborhoods, and the ships stay on and just belch really bad diesel fumes. So there's a big effort of ports around the world to electrify the charging operation when ships are in port. There you go.
Thank you. Thanks. I think we have time for one more question. One more.
Hi, thank you for your time. My name is Michael. I'm also a graduate student at Columbia, but at the School of International Public Affairs. Looking at the cost of storage, in Republican circles it's becoming popular to push for a carbon tax if you believe in climate change. But on the liberal side, if you're looking at states like Massachusetts implementing the Clean Peak standard, what is a better policy response to make storage more economic and feasible, even in states with less insulation like Massachusetts?
Peter, do you want to talk or Nate, either one of you on the storage side?
Well, I would just say one thing. It's some of the more recent requests for proposals and RFPs that states are doing. Massachusetts, Illinois is doing one now. Those have an adder. They pay you more money if you have storage. And so now all the people bidding in are bidding in with storage. So I think that's been a great, and so we're going to see the amount of storage deployed in Illinois in particular when that opens up, and a couple of the other states that are opening up. I think many of those projects will have much more storage as a component of them. So that's the first step, I think.
The one thing I would add about storage, I wouldn't worry much about storage policy, and the simple reason is the price of storage is being driven down outside of the power industry. It's being driven down because of vehicles and cell phones and everything else that uses batteries, pretty much everything we touch. So it's going to get to the price point we need fairly soon, with or without these policy supports, though that would speed things up. Do you want to add anything to that, Nate?
Okay, thank you.
Thank you. Please join me in thanking our panelists this afternoon.